Insurance is such a presence in our everyday that it's hard to imagine living without it. But throughout much of the colonial period, that just what Americans did. Insurance arrived in the American landscape at about the same time as the idea of single nation. The United States began to form, and it was unheard in by one of the country's founding fathers. Let's take a look at the history of insurance in the US. The first insurance company in the US date back to colonial day, the co-founded by Ben Franklin in 1752. Property insurance was greatly not an unknown concept in the 18th century. England fame insurance London was established in 1688. The city was haunted by a fear of fires, much like London in the 1600 houses at the time were made out almost. With the rapid growth of insurance companies and insurance products in the late 19th century, the young industry was soon beset by fraud and practices. Scandals ranged from companies that sold policies without having the capital to pay their claim, operating instead to ensure that forced out competitors is in an attempt to create a monopoly. Many states passed laws to address the problem, but in the early 1900s abuses remained rampant. As a result, the power of the major insurance driving out the little guys, along with most of the fly-by-night operators. In 1944, the Supreme Court ruled that the insurance industry should be federally regulated. However, Congress passed the McCarran Act in 1945, returning oversight to the state level. Regulatory control remains the most profound change in the US insurance industry in recent years has been propelled by the growth of the internet. Insurance buyers go online to shop for coverage, and insurers have changed many of their sales and underwriting practices. As a result, the worldwide reach of the internet has also led to further mergers among financial service firms as they compete in what and a global marketplace.